This conference will now be recorded.
Okay, start. Okay, so yesterday we have seen how we can do some basic configuration in ISU with the minimum, line items what you want to calculate. So with that configuration, basically in terms of billing, we have done a process starting from the creating metering order till the billing and invoicing being done. Now, in the yesterday scenario, we did not include the what you call the device metering, but in reality, it can also be there. A metering can happen for the device. Meter will be there. So with the meter, without meter. Now there are many installations where there will not be meter. For example, street light billing in utility. There we don't measure the consumption. There could be some installations where a flat rate consumption is considered. That means the consumption is happening all the time at the same rate. So like telecom towers, okay, where the tower is basically sending the signal. So that particular equipment is consuming at the constant rate throughout the year, all 24 by 7. So in such cases, there's no need to measure the consumption. We can do the billing with the facts level installation data. Okay. But there could be large number of installations what we have in utility are based on the meter reading. Okay. So today we will see just one cycle. Basic configuration is same, except that device management, we have to do some device settings. Otherwise, it is more or less same. So instead of, going and configuring the device management, we will take one of the, division, other batch in the utility where you have done the device management configuration. We will do one meter reading to cache cycle. Okay. That means right from creating meter reading, there is a starting process, and then till the payment is entered. Okay. Till the payment is entered with the FICA integration, we will see how it happens. So you get an idea, like basically how FICA is coming at what particular point of time, and also the process of preparing invoice is happening through ISU. Okay, invoice is being prepared in ISU because of the generic business process, and that invoice is getting posted into financial accounting to the FICA, and then we are posting it to financial accounting. So you have the same kind of data, but we'll create one new data for premise installation and device installation, and then move in and the meter reading and billing. So we will go to create the initial data, technical master data. So I can take one of the existing installation, find out what is a premise, and for that premise, we can create a new premise. So go to technical master data, installation, display. We have installation 174. This is for the division 10. Premise is 150. So let me copy this. Create one new premise. Premise is basically apartment. You can think here. That is where business partner is going to occupy, and then consumption will happen. So I'm going to create first a new premise, and then I'm copying from premise number 150 and then save it. So our new premise is 152. And for this 152 premise, we are going to maintain the installation data. Basically, in ISU, installation data refers to a particular premise and for a particular division. Okay. So go to create installation effectively available from 0101 2019 and division is 10, and our premise here is 152. So let me enter 152. Then in the installation, we enter what is a billing class. Z100 is a billing class and corresponding rate category, okay, is Z100 and MR unit is S1, okay. Basically, rate category will control the schema which is required for billing, and schema will have one or many rates, and each rate will calculate one or many billing line items, okay. That's how the line items are derived in the billing document. Like in telecom also, when you do billing document, there is a there must be some configuration which will determine the billing line item. Okay, so each billing line item is a charge amount what we are charging to the consumer. Okay, that's the basic thing. So here we have created the rate category, save it. So our installation 176 is ready. Okay, 152 is the premise and 176 is the installation. Okay, after the installation is created, we will do the device installation. Okay, because here consumption is happening. So how that will be known to us? How much is the consumption? There will be a electricity meter that will keep recording the consumption in aggregated fashion. At any given point of time, if we take the meter reading and deduct it from the previous month meter reading, we come to know what is the consumption, and that consumption is what we are billing. Okay, so let me go to device management, do the device installation full. So our installation here is 176 and activity date 01/01/2019. Now new device, let me try whether 522 it will accept. It should be available. Otherwise we'll add something. It is taking. That means meter is available for installation. We have already created. Activity reason installation extension. At the time of meter being installed, what was its meter reading? Okay. Usually whenever meters are put in the installation, they are calibrated to 0. Their initial meter reading is 0. Then as the consumption will start, it starts, aggregating. Okay. First month, when you install it is 0. After 1 month, it is showing 600. Second month, it is showing 1300. So at any given point of time, it will keep aggregating the consumption data. Okay. So here we will say at the time of it is 0. And what is the expected consumption of this meter? Based on the historical data for a 2-room apartment with the 3 people or 4 people, generally you observe the consumption is around 700 kilowatt hour for 30 days. And we have something called a rate type, which is basically required for the rate determination. Yesterday also we had a rate type, but that we entered in the installation fact because we did not have the device installed there. But today we have the device, and in device we have the register. Register means the component of the device which is actually recording the consumption. Okay, it is a part of the device which is recording the consumption. So for that we have given the rate type. Based on the rate type, it will determine the rate what is required for line item calculation. Okay, now we will save it, and now we will do a move-in process. Okay, now let me create one new contract account by copying existing one. So we have 1401 existing contract account for a business partner 201. So I will create one new contract account here. So go to CA1, business partner is 201. Okay, 201. Contract account category 10 and reference is 1401. So here 1000 is a tolerance scope, clearing category. All this we are going to configure in our case in future, including the dunning and everything. So right now we have put some dunning procedure here. Okay, this is for ISU student, not for the FICA we have done. So for them, they don't get into the FICA side. They are only doing on the ISU side. Okay. So here we are saving the contract account as 1617. Okay. So our new contract account is 1617. Now we will record a moving document when the partner entered. Let's say partner moved in the month of October or September. Okay. So we can prepare the historical readings and billings and then go for the invoicing. Okay. So let me go to record a moving document EC50E. Let us say 01/09/2019. And what is the contract account for which you are doing the moving? The moving we are doing for 1617. 1617. And for which installation we are doing the moving. Okay. Installation is connected to basically premise. So by entering installation, we are saying in this so and so premise we are doing the moving. Okay. So our installation here is 176. So enter 176 as the installation. Then we enter what is the ID for account determination for the contract. So we have got 10. Okay, here 10 is the residential household consumer. It is 10. At the time of move-in, what was its initial meter reading? It is 0 again because meter was installed on 1st of January 2019. Afterwards, there was no occupancy. Okay, so now occupancy is happening from 1st of September. So naturally, it was a vacant installation. There was no consumption. So 0 is acceptable, and then save it. Now it will prepare a kind of a welcome letter for the account holder. Print the welcome letter. So it will say, we have recorded move-in for you, and as per the move-in document, a contract has been prepared, and this is your billing category, meter number. All this information will be printed on the welcome letter. Okay. So once the move-in happens, the contract will be updated in the installation. So if we go to our technical installation and then see here, a contract has been prepared. It is given as 173. So 173 is basically the contract for the electricity division. Okay. Now contract is the prerequisite for billing. Unless there's a contract, we cannot do billing in ISU. Okay. Contract is basically an agreement between the utility company and the business partner. Okay. So if the premise is having multiple installations for multiple division, like electricity is there, gas is there, water is there, for each installation, we will do the move-in and a contract will be prepared. Okay. So here this contract, what is created 173 is for basically electricity division. Okay. And the billing period is starting from 1st of September. The move-in happened on 1st of September. So the new billing period will start from 1st of September, and it is monthly billing, periodic consumption billing. Every month you do the meter reading on a scheduled date, and once it is entered, we go for the billing. Now, billing will happen because of the rate. The rate is going to calculate the line item. So if we go here, we can find out what is the rate. Okay, rates. It has got a rate Z100-1. Okay. If you select the rate, it will show what are the values calculated. So it is calculating the energy value and lump sum energy value. First is the consumption value. It is calculating based on the meter reading what is the amount. Then we are also fixing some lump sum energy charges. Okay, that means irrespective of what is the consumption, you have to pay some fixed energy charges every month, and the price of that is fixed annually. Okay, 6,000 or 7,000 rupees per year, which you are charging on a pro rata basis every month, depending on the number of days of billing what we are doing. Okay, so the move-in has happened, contract is prepared. Now we are going to prepare the meter reading order. Okay, every month we prepare a meter reading order. Based on meter reading order, the person will go to the field and then do the meter reading. Okay, but internally what happens when you create a meter reading order, it will also create a billing order. Billing order is required for billing in ISU. In the case of consumption billing, unless you have a billing order, we cannot do the billing. Okay, but billing order we cannot create directly. Once you create a meter reading order, the billing order is also created automatically in the background. Okay, but suppose there are some installations where you have no what you call device. There also we create a meter reading order, but that is basically required for creating the billing itself. Okay, meter reading order is not there, but it will still create a billing order. Why? Because unless the billing order is created, we cannot do the billing. Okay, that's the reason. So whether it is having the meter or not, okay, see, the system has to create a billing order. Based on that, billing will happen. Now in our case, the meter is there, so metering order is also created, and also billing order also created. Okay, so let's go to create the metering order. EL01 is the transaction code. We are creating metering order for the installation 176, and our reason for creating the metering order is periodic consumption billing. Okay, there are some more reasons are there for which you can create metering order. interim metering order with billing, without billing. Okay, but here we are doing basically for the consumption billing, execute. Now, based on the MR unit, we come to know what is the date of meter reading. Okay, now moving happened on 1st of September in 2019. So naturally, our date available in the September, we have to find out when is the meter reading. It is going to happen on 29th of September. Okay, meter reading should happen on 29th of September, and the end billing date is 3009. Okay, so every installation will have an end billing period. That means billing for the period in September will end on 30th, and the new billing will start from the period 1st of October, like that. Okay, select it and then create a order. So now metering order created and also billing order also created. Now billing order will be shown in the what you call the installation. Okay, the moment you create a metering order, the billing order is updated in the installation. So first we'll go and see whether billing order has been created, and billing order, it will show whether it is billable or not. Okay, unless you enter the metering results, it is not billable. So we will first see the installation, what it is showing. Go to ES31 installation, billing periods. So here billing order is created, but right now it is showing with the red mark, it cannot be billed. Okay. The reason why it cannot be billed is because we still have not entered the result. Okay, metering result. Now let me enter the metering result for September. So go to EL28, enter the consumption data for the installation 176. Meter reading recorded, we will say 750 is the meter reading, which means what is the consumption for the period? At the time of moving, it was 0, and on 29th of September, it is showing 750. So basically, you can say consumption for the particular month is 750 kilowatt hour. Okay. So what we are billing is 750 kilowatt hour. Now for billing, we require the price data. Okay. Price data, we have to provide in the facts. In the installation facts, we have got rate category facts. We also have the facts in what you call the rate also. Okay. Facts are basically like containers where we are storing the price related information. Now, installation, I need not enter. Probably I already have the information in the rate category. Okay. So if I go and see the rate category, we might see the operand being maintained. The price values might have been maintained. So let me go to the billing master data and then select rate category, change. Z100 is our rate category. And here if you see the facts, we're given energy price, standing energy price, and also factor. All the information is already given. So because the rate category is common to n number of installations. If there are 5 million installations which are all residential, then for all of them the same price data will be required. So instead of going and maintaining in each and every installation, we can as well maintain in the rate, the billing rate category level. So it will apply to individual installations. Okay. So now we will just simply go and create a entry results already done. Billing will do. Okay. So go to EASI BI. I am preparing the billing document. Billing document for the period 30/09/2019, and document date is 30/09/2019. Posting date also 30/09/2019. Now, if you want invoice to be also created automatically in the background, we can give the reconciliation key. Otherwise, we can just go and create a billing document. Then you can prepare the invoice separately. There's no need of reconciliation key. Okay. So we will keep the invoice on hold. First, we'll prepare the billing document. So installation is 176. Execute the billing. Billing is completed. We can check the billing, how it has been done. Go to ES31. And if you go to billing periods, document, now billing order is removed. Once the billing is done, billing order is removed. That means billing has been done. So if you select the document, this is the billing document. Now there are three line items here. First line item, it says statistical information on the quantity. Okay, how much quantity is getting billed in this particular month. So our period of billing is from 1st of September to 29th of September, and for that the consumption is 750 kilowatt hour. The second line item is the price. At the rate of 10 rupees we are going to bill. So 750 into 10 rupees, that is 7,500 rupees, is the consumption energy value, what consumer has to pay. And then we are also charging the standing energy, okay, that is lump sum energy. The lump sum energy is basically 6,000 rupees per year, but we are charging on pro rata. So for 29 days, the amount is coming to 715.07. Okay. So 6,000 for 365 days. For 29 days of billing, what is the value? So there are two billing line items, the energy charges and the consumption energy charges and lump sum energy charges. So you can have any number of line items in the billing depending on the rules of billing of the utility company. In some companies, they may add distribution charges, some kind of surcharges. Okay, so that is all decided by the rate. Okay, so you can create a rate according to your business practice requirement, and then based on that, the billing will happen. Okay, so now here we have got what you call the billing has happened. Now we'll go for the contract invoice creation. Okay, so go to EA19 to prepare the invoice, EA19. The document date is basically 30th of October, okay, 2000, October 9, 30th of September 2019, 30th of September 2019. We have to give a reconciliation key. Now, reconciliation key is required if you are posting a single invoice, okay. But if you're doing mass processing, then you do not require a what you call the reconciliation key. Why? Because there the system itself will create a reconciliation key. Okay. If it is mass processing, then you don't have to create any reconciliation key. System will automatically create in the background. Okay. But here we will enter. Let's say our reconciliation key is 1800, some number, and the contract account. Our contract account here is 1617. Okay. And then execute. 1800 does not exist. Reconciliation key. Do you want to create? Yes. Okay. Now it is referring to the billing document what you created just now, and that billing document it is converting into an invoice, and thereby it is also posting to FICA, a FICA document. Now we can see what is the invoice posted. Okay. If you go to display document, it has prepared invoice for 9036. This is the print preview. Okay. So invoice will tell the consumer what are the items charged. Energy at the rate of 10 rupees, 750 kilowatt hour, 7,500. Flat rate energy price is 715 rupees. Both put together 10% tax, 821. So the amount to be received from the consumer is 9036.58. Now this amount is debited to contract account by using a sub transaction which is basically aggregating the value. Okay, that means it is not going to create two open items. It is going to create only one open item inclusive of both the values, that is the standing energy, consumption energy charge, tax, all put together one amount is created. But whereas in the case of open FICA document, suppose you are posting a FICA document ourselves in FPE1, then if we enter three line items, each line item will be debited separately. Okay, there it cannot do the consolidation. Okay, but here we are using 0100 as the main transaction with the additional sub transaction 0002. That 0002 has been assigned to internal sub transaction 0020, which is a debit entry. Okay, because of this internal transaction coding has been done, what it will do, if there are 10 line items in the invoice, all the 10 item values will be added together, summarized, the aggregated total value will be debited to contract account. Okay, because there is no point in preparing 10 open items. It is only one open item what consumer has to pay. Okay, so if you go to environment, display the document, it has created a FICA document. And here the FICA document created is posting. Basically, there are three values: offsetting entry, three GL items are there: electricity charges for the consumption, GL account 8 lakhs 600 for standing energy, 8 lakh 520 for regular consumption energy, 1 lakh 75,000 is a tax. So these are called offsetting accounts. Okay, the offsetting accounts are basically here credit items because you are debiting the contract account. So 7,500, 715, 821. These are supposed to be posted to the revenue accounts, what have been determined here. But the aggregated value is debited to contract account by using 0002. Okay. This 0002 is a sub transaction what has been assigned internally to 0020 in the setting, like what I showed yesterday. Because of that internal, what you call the sub transaction, it will aggregate the value and then debit the contract account. So sum total of this contract account has to pay an amount of 9036. So a FICA document is posted and this amount will be now reflected as the open item in the account balance. So if you go to the open account FPL9 account balance, now we're going to start discussing on the account balance after this is over. How to design. Here we are using some existing data, but we'll be in a position to design our own account balance, information. So here we are selecting, let us say, open item. So here it will show there is one open item which is 9036, okay, which is already due. Why? Because our payment term is immediately, but the invoice was posted on 30th of October, September. So it is receivable 9036. Okay. Now, whenever it is posting to FICA, the FICA document will be there. That FICA document will be shown here. This is the FICA document which posting has happened to the contract account. This is the date, and then amount what is shown here, and then status of the open item. It is overdue. It is already due. Open and due. Okay. Now we clear this open item by entering the incoming payment. So go to FPCD. So we'll be configuring in future the payment, how to enter incoming payment. Different methods of payment we can configure. At the moment, I'm entering cash desk payment. So company code is 1000. In that I'm posting. Now, probably September was the invoice. So consumer has paid the amount in October. Let's say 10/10/2019. 10/10/2019. Value date. On which date the value is realized. For cash payment, same date. Okay. That means in the cash desk, we are receiving the cash. The value date is the same date. But in case of check payment and payment order, we will have after 2 or 3 days. Check if it is deposited, the value will come to us after probably 3 days or 4 days once it is realized. So either you can enter their value date or system will determine based on the user exit. Okay, so that is a different thing what we'll see in future. So here we are saying 10/10/2019. Okay. Now here I'm selecting the items, but once you configure the once you configure what you call the clearing category and clearing strategy, you have to just enter the amount. It will automatically select the open items to clear. Okay. But here I'm selecting manually what items I have to clear. So reconciliation key is, let us say, 1800, currency INR. Okay. Enter. Now go to select the items. So no items could be selected because you did not enter the contract account. So you enter the contract account as 1617 and then select the items. So we have got one open item 9036. Now if you enter the full amount, it will clear the full amount. Okay. But you can also do partial clearing. If you do partial clearing, then what will happen? It will clear to the extent what you entered, but it will keep the open item again open with the new balance what has to be received. Okay. So let us say the consumer is not clearing the whole amount. They are clearing only 7,000 rupees. Okay. So 9036, we are not clearing fully. We are clearing only 7,000 rupees. So amount cleared is 7,000. So payment received is 7,000 and then post. So payment has been received. Now, if you go to the account balance, how it will show? FPL9, open item is still there. Okay. Now it is showing 2036. Out of 9,036.58, we have entered 7,000 rupees. So balance is still showing open here. But in the payment list, you can see no payment. Okay, what is the contract account we given? 167. Open items, payment list. Okay, it will not show here. But if you select all the items, okay, if you select all items and then see, initially you debited on 3009 a invoice of, uh, yeah, actually original document was 191, but for that amount was 9036, but that 7,000 has been cleared. So what it will do, it will split the open item into two values. 9036 is now split into 7,000 and 2036. This 7,000 has been cleared with the clearing document 10229. This clearing document is basically payment entry. So if you go to payment list here, you can see the clearing document 10229 manual payment. Okay. So basically here the receivables are reduced. Now this is the amount what is still available, still to be paid. Okay. Now I can create a balance payment also. Go to FPCD and company code is 1000. Balance payment was given on 15/10/2019. 15/10/2019. Value date 15/10/2019. And reconciliation key, it is 1850. And the contract account is 1617. So if you go to select the items, it is showing the balance amount. This is what we are clearing. So 2036.58 is the balance amount what consumer is paying. Okay. With this, it will clear the whole receivable. So now open items will be 0. Okay. If you go to FPL9 and then see open item, there is no open item, nothing to be paid. Okay. Nothing to be received. But if you select all the items, it will show both cleared items and open item. So 7,000 was first cleared. Actually, it was not 7,000, 9036, but because you did the partial clearing, it is clearing amount is maintained as 191, 7036, 700. Balance amount was kept as 2036. This 2036 has been also cleared. So whenever the open items are cleared, it will show the indicator receivables have been paid. Okay. And then if you go to payment list, we received two payments. On 10th, we received some payment and 15th, we received two payment. Whenever the payments are received, items are cleared, the clearing document is also linked to the open item. Okay. So if I select 191 as the initial document, and if you go to clearing analysis, it will show the clearing actually happened in two ways. Okay. First, it was cleared 7,000, then it was cleared as 2036. And for both of them, it will show what is the clearing document. This was the first payment posted. This was the second payment. Okay. So clearing documents are linked to the open item document what was created initially. Okay. So this is how the payment entry has happened here. Okay. So here we have seen the scenario where the invoice was created for a kind of a business process originated from ISU. And then we created the invoice and then posting happened to financial accounting, FICA, and then we are going to transfer data from FICA to financial accounting. Now, apart from this, we have so many scenarios where we are going to post a document in FICA directly. Okay, that process we have to learn now. Okay, so we have seen directly we are preparing a sundry receivables, posting it to FICA. That is the first thing we saw. Then we saw how to post a SD invoice because of a generic business process in SD, order delivery billing invoice, and then posting to FICA. Then we created an ISU invoice without device management. And today we have created ISU invoice with the device management. Okay. Now in future, what we'll do, we will again link the ISU business process for creating one more entry into FICA, that is security deposit. Okay. When you're going to configure security deposit, we will do both the process. Entering security deposit directly into system using the FICA transaction. Otherwise, you can request for the security deposit while doing the move-in. When the business partner is moving into a premise, in the moving document, you can enter the security deposit, what we are asking. And based on that request, based on that amount, a request document will be prepared. In either way, when you post a security deposit directly into FICA or coming through move-in, a request document is prepared, and that request document will be posted as a statistical item. Okay, so we'll be seeing what is statistical item. There are so many scenarios where we'll be working in statistical item, security deposit, and then interest charges. Okay, so these are some of the examples what we'll see in future, which is basically called security deposit. Now, at the moment, you have done the standard invoice. Later, at some point of time in the middle, I'll show you one more scenario, which is called collective billing. Okay, because there's a separate kind of category of contract account what you can work. Right now, we are working on standard contract account category. Standard contract account category means you create a business partner. For business partner, you can have a contract account created, and that contract account you can use for preparing the invoices, or you can post directly into FICA. Okay, that is a basic role of the standardized contract account category. But we'll be working on one more category of contract accounts, which is called collective bill. Okay, so what is the scenario for collective bill? We will see in the future. So we will do the business process for that as well. Now, having done the invoice posting generically from SD and ISU, now we'll start getting deeper into the FICA. Okay. At the moment, we have done what you call the main transactions, sub transactions for one scenario, and then account determination for them, tax account determination, posting into FICA, and how to read the data from the account balance. But now, account balance itself is a configurable tool. Okay, is one of the most often used and very important, tool or reporting system what we have in FICA, which is very handy to show the balances, account balances. Like in standard SAP also, we have got account balances for customer accounts, vendor accounts. GL account balance is also, of course, is there. You can also find out GL account balances at any given point of time. But GL account balances are not necessarily open items. Okay. But the subledger accounts are basically open items, because whenever you're using subledger account, you are posting something to subledger account, parallelly posted to reconciliation account. But the entry what happens to the subledger account is always a open item. In case of receivable, it is an invoice what we are posting, and in case of vendors, it is a payable what we are posting. Okay. Then you clear the open item by doing the incoming payment. Okay. But there are other methods of clearing also. For example, let's say we have got a contract account with the open item, which is debit entry, but also there is a credit item, which could be like a credit memo we have done. Okay. But there is an open debit item, there's an open credit item, but the account balance will not happen. These open items have to be still cleared. Okay. That means open items have to be cleared in any case. So you can do account maintenance. By doing account maintenance, what happens? Open debits can be adjusted with the open credit. Okay. So that the correct balance is derived. So account maintenance we are going to do in future. But basically in account maintenance, you can do for individual account or you can do mass processing. Okay. Basically, you are adjusting the open debit items with the open credit items. Open credit items could be like, on account payment, or let's say a security deposit amount released, okay, or a down payment what you received, okay, or it could be a kind of a, yeah, down payment, on account payment, or a credit memo. These all will lead to open credit item. Okay, how the open credit items are created, we will show you one example. Then we start working on the what you call the account display. Now, if you remember, we created some main transaction and sub transaction. The main transaction is basically sundry billing, but for that we have got some sub transactions like price, installation charge, transportation, consultancy. But we also added one sub transaction, which is for the credit posting. Okay. So if you go to financial accounting new, contract accounts receivable and payable, and if you go to the basic functions and postings and documents, document, maintain the document assignments, and then maintain the main transactions. So here our main transaction what we created was 5,000. Okay, this 5,000 is the main transaction we have created. But for 5,000 we have created some sub transactions. So if you go to application area R and 5,000 is the main transaction. So here we have given one sub transaction as 5005. That's the credit charges. Okay, you can say credit memo. You can say credit charges or credit memo. You can say that. So whenever you post with the credit sub transaction, it will credit the amount. Okay. So if you go to see the assignment with the company code, we can see how it has been maintained. So if you go to maintain transactions for billing, actually you can select from any of the transaction, all the main transaction assignments will be shown. Okay. Company code is 555. Division we are not considered 5,000. So we have got 5005. This is, if you see the configuration, we have marked it for credit. The sub transaction value will be credited to contract account, and the GL account has to be required for that. Okay, manual posting is allowed. So let us see whether you have maintained a GL account determination. Go to EK02, chart of account is INT, and our company code is 555. ID for account determination is 50. Main transaction 5,000. Now we have maintained only for 5004. 5005 we are not maintained. We can just select the line, single copy. We'll just make it as 5005. We can use the same GL account. Okay. Is not supported. Correct your entry. Let's see. What is the sub transaction here? 5002. Okay. 5003, 5004, 5005. 5005 is not supported means maybe I think in the assignment it was not done properly. Let's see. Go to IMG. Go to financial accounting new, contract account receivable, basic functions, and then posting in document, assignment, maintain sub transactions. So application area R, main transaction is 5,000. Sub transaction is okay. Our main transaction is 5001. Actually, credit memo I have maintained a separate main transaction. So what I will do here, I will extend that sub transaction 5005 to the main transaction 5000. Okay. So let me select this particular line and then copy. We'll make it as 5005 credit memo. Okay. Credit memo and then save it. Now for this particular combination, we must also have the assignment to company code. So go to maintain transactions for billing. Unless you assign to the company code with the ID for account determination, it will not allow us to do the GL account determination. So our company code is 555, main transaction 5000. We have got now 5001, 5005. It was misleading. So I will select this line and then copy, make it as 5005. Okay. Manual posting, and we have to make it as credit. Okay. This is to be credit. Continue and then save it. That means in the main transaction 500, I can use sub transaction 5005, which will actually credit the amount to contract account, because here you can see we have marked it as credit manual posting. Now suppose if I have a debit item and the credit item, how it will show in the system? We will see. We will create now one new contract account. Existing contract account, let me find out from the company code group 555. We have got a contract account 5101. Okay, this is a contract account which is created for basically for our company code. Let me once again check it. CAA2 contract account created for company code group 555. It is 5101. Business partner is 226. Okay. So for same business partner 226, I'll create one more contract account CAA1. 226 is a business partner and our contract account category is 50. That is the standardized contract account category, and we will copy from the existing contract account what is available 5101 and then continue. So 5000 is a tolerance group, standard offsetting, and then payment terms you are given 5000. This is the payment and taxes, dunning, and then save it. So our new contract account is 5106. Okay, 5106 is the new contract account. Now for this 5106, we'll make one debit posting using the sub transaction relevant for debit, and then we'll do one for the credit posting. But before you do the credit posting, we must also maintain account determination for that. Okay. So now let me go to EK02, select existing GL account 555 50. Main transaction is 5000. We've got 5004. We'll select it, single copy, and then make it as 5005. Let's say for time being, we'll use the same GL account, or you can create a new GL account for posting the credit. Okay. So maybe it is better because this is for the consultancy. So let me select the line, copy, and then create one new GL account and then use it. FSP0 will create the GL account. We'll create 04 GL account, create with the reference. We'll use this as a reference in the chart of account INT, and then we will say credit charges, credit memo charges, and then save it. Now we will maintain the GL account in the company code level. So we are going to maintain in the company code 555, create with the reference. This is our initial reference for the company code 555, control data, and then save it. So we will assign 800804 to the particular transaction. Select a new entry, company code 555, division 55, main transaction 5000, sub transaction 5005. Main transaction, okay, division you should not enter, sorry. ID is 50 and the main transaction 5000. The allowed sub transactions we have got, allowed sub transactions is 505, and then continue. Already exists. Okay, we created but we did not make a GL account entry. Okay, so you have to just enter the GL account. So company code 555 50 and then main transaction 5000. So here we have got 5005. Select the particular line, see the details. Here we'll make it as 804 and tax code is 50, and then save it. So we have maintained GL account also for the credit memo. Okay. Now we'll go to create one FICA document, FPE1. Suppose you have done the posting on 01/11/2019, 01/11/2019. We created our own document type. Document type is 50 and then currency INR. So reconciliation key, we'll just enter it as key. We have got one reconciliation key created, we will use it. and company code is 555. BP item we have created as 50 BP item.